obviously you can see that the longer term contracts were starting to find a little bit of upside value. Inflation was holding high. The Fed still hadn't moved. And when the Fed did move, they moved a pretty miserable 25 basis points. And then we got this big rip in inflation. Everybody thought the Fed is way behind the curve here. And I think we had a conversation this time last year. And I think this is exactly what was said, if you remember. You might agree, you might disagree, I don't care, but it's exactly what we did say. I said at the time, I think the Fed is way behind the curve on this one. Way behind the curve. I would have started interest rate rises 6 months earlier. Does anybody remember the conversation back in those days? Because the Fed is way behind. The Fed is miles behind the curve here. And because of that, inflation got out of control. And now the Fed is on some sort of catch-up phase. Now, fortunately, the Fed went on, well, I say fortunately, but obviously that comes with a cost. The Fed went on this rampage of interest rate hikes. And they managed to get inflation to come off quite considerably. They managed to come off quite considerably, didn't they? So they managed to get those rate hikes and they got this response to inflation. So they did a good job at that stage, right? A very good job. But they didn't finish them off, did they? It's like you can always tell, can't you, in the movies? How many people know this in the movies? That they don't finish off the villain, right? Just put one right between the eyes, right? Finish him off. Because guess what happens if you don't finish him off? What happens? He rolls over and he goes, and he picks up his gun and the hero's walking away and all of a sudden, crack. The gun fires and the hero goes down because he never finished the job that he was sent to do. Never leave the villain alive. Never leave the villain alive. Pop a cap in his ass, right? Get it done, sorted. So they never finished off the job here. And what happened was inflation started to pop back to the upside. The Fed rallied aggressively here, and inflation dropped off. And then what happened? Oh yes, our old friends came to town, guys. So the Fed did a good job here by ramping up aggressively. And it killed inflation and it looked as if it was really good. And then what happened? Our old friends, the Saudis and the Russians, decided that wasn't good enough. They didn't want to see inflation going down anytime soon, right? So what did they do? OPEC Plus came to town and says, you're not getting away with this one. No way are you getting away with this one. We're going to ramp that inflation back up whilst you've got high rates. And obviously, all of a sudden, they decided to ramp up inflation. Inflation regained an awful lot of the upside again. Not all the upside, of course. We're still miles away from where we were. But it obviously left the Fed in a real troublesome situation. Number one, they've got very high rates. Number two, inflation is coming back in again. So if the OPEC Plus decide to go after the West and ramp up rates, ramp up production, or ramp up production cuts even more, then of course they could really cause a serious problem. Why? Because remember all those trillions of dollars of borrowing at zero? Remember all those trillions of dollars that the Europeans, the Brits, the US did at zero? Well, all those trillions of dollars a couple of years ago are all coming up for maturity now, aren't they? All those trillions of dollars, the initial 2-year treasuries, the 5-year treasuries, the 3-year treasuries, all of those trillions of dollars are coming up for renewal soon. And instead of renewing at zero, they're renewing at what? 5.5%. 5.5%, right? Billions of dollars in interest payments. Billions of extra dollars. In fact, change that. Trillions of extra dollars per year in interest rate payments. Think about it, guys. Imagine $30 trillion in debt and you've got to pay 5% to refinance that. 30 trillion in debt and you've got to pay 5% a year to refinance that debt. Just do the sums. $1.5 trillion per year in interest payments, in interest rate payments, just on its own, right? Think about the amount of money that's got to, suddenly the government's got to find $1.5 trillion just to pay the interest in the first place, just to cover the bloody interest. So obviously it's incredibly important that they get this number down. But how do they get the number down if inflation's up here? And where does the money go, Paul? It goes to the owner of the US Treasuries, doesn't it? The owner of the US Treasuries, the Japanese, the Chinese. It goes to the Japanese, the Chinese. They've got massive holdings of US Treasuries, of course. So all the US money goes to those guys. Absolutely. Absolutely. So you can obviously understand the challenges. I mean, I'm not saying that this is an easy challenge for both government or central banks at this point. But they've got a serious problem, haven't they? Inflation is so high, and they've not got any ammunition left, unless they decide to absolutely sink the economy. So the government has one massive choice to make, and that is, do they cut services really, really, really hard? Do they basically cut all benefits down to the bare minimum? And basically, do they cause a lot of economic and hardship, which obviously for politicians just simply isn't going to be palatable because they won't get re-elected, of course. So you can see obviously that this is the challenge that any democracy has, is that you've got to keep giving the free stuff. Once you start giving the free stuff, you got to keep giving the free stuff, because all that free stuff is just chased up the inflation markets, right? So you've got a challenge to make. Yeah, the big thing about Elon is, of course, that he doesn't have to get re-elected, does he? Doesn't have to get re-elected. So when we see these ideas, we've got a real problem, because I asked the question, and I don't know if anybody had any answers. If we put you in that position, if we put you in this current position here, what would you do? What would you do, Jack? What would you do, Paul? If you were taking over, if we said to Jack and Paul, God forbid the two of them on the central banks, imagine the two of them trying to agree between themselves on a policy. What? Anyway, you've got to come up with a policy, a consensus between the two of you about what to do up here. What are you going to do? Would you cut spending by $1 trillion? And if so, where would you cut the spending from? Would you decide to go into a big QE program knowing that that's going to put inflation through the roof? Would you decide to crank up rates to 7s and 8s and 9%, knowing that that's probably going to bankrupt America? But that's a problem with reissuing the debt, because you're reissuing at a far higher yield, aren't you? Now, what could you do? What did the Japanese do? What's one of the things the Japanese could do? What's some of the things that some of the governments across the world could do? Well, they could refinance for a very, very, very long time, couldn't they? So they start bringing out 100-year bonds. They start doing these 100-year bonds and stuff like that, so that they refinance ridiculous durational type stuff. But when you think about it, it really is quite a challenge. It's difficult to come up with an answer, isn't it? It's not an easy answer. Usually what they do at this time is what? What's the best thing they normally do at this point, guys? They create another big event in the world, don't they? They normally go after a war, or perhaps wars are usually a great excuse to get everybody's minds away from this stuff. So the usual response is to get some sort of war kicking off. Everybody forgets about this problem here, and all of a sudden the problem goes away, because obviously it gives them the right to print even more cash under war conditions, of course, and that's exactly what they probably are planning at this point. How do we get a good solid war out of this, where we can actually balance everything up here? Yeah. So, Jack, Paul, is that your plan? Is that what you decided? Are you going to invade Canada? Mexico? You need a war. You're going to have to divert people's attention, right? You need to do something. So, because this is not easy. This is not easy. Yep, wars do solve everything. And if they don't solve everything, Steve, the good thing is that you can launder so much money through every single war, and every single war has been laundering money, of course, in the history of mankind, humankind. Every single war has always been as a result of massive money laundering events. And on the basis that you can launder so much money, you don't really care because you're going to retire with hundreds of millions of dollars anyway. So, just get that money laundered, get the war movement going, and, and invade Canada. Because I'm sure Trudeau would put up a big fight. He looks like the kind of guy that would definitely fight to the death, isn't he? That boy, my God. You could imagine him starting to cry if you messed up his bloody hair, wouldn't he? What a wimpoid. I would definitely do a YouTube boxing fight with that boy. Definitely. I'd love to have a toe-to-toe with that boy. That would be great fun. Let's raise some money for charity or something. That'd be great. I'd like that a lot. Anyway, cash open, guys. We're off and running. We are off and running. Momentum boys are quite bullish at the open so far. Momentum boys quite bullish at the open. Volatility, guys, I am not seeing a trade yet in line with that storyline. I'll bring this across. You might be able to watch it develop. Remember, we had a little introduction to this as a process earlier on today, just allowing people to have a little think about it, because I was thinking of trying to get this in some ways brought together as a single piece of information so that we can have it for a scalping class as a good piece of background. But you can see that generally as a rule, if this is going up, we should be buying it. If it's going down, we should be selling it. If the red is lagging the purple, we should be buying. If the red is ahead of the purple, we should be selling it. So the slope is important and the shape is important, and then we look for the individual triggers in here which are important. So at the moment, I like the idea of buying it, but I need to see this spiking down. And I would be interested in buying it if it does spike down. I like the idea of buying on dips at the moment. That seems to be where the trade is at for me. So I start looking for those buying on dips, and you can see that buy on dips just had a brilliant buy side response, didn't it? Look at that, guys. That was kind of crazy. So we already just, as it was happening, we says, we far preferring the buy on dips. I didn't see the trigger that I was needing, but I did get some business done, and I've been able to take a quick scalp at break even, and I am in the monies. So quick profit on the first buy trade, not a perfect trade by any means, but a quick scalp buy trade on that one. And we're going to be watching to see if we get any more buys on dips. I like the buy on dips still. Red below purple, purple rising is a buy on dips. I would like to see the volatility hedgers coming in and spiking down. Remember, it is a volatility hedge. It's not a swing trade. It's not a directional bet. It's purely a hedge. So I want to see this line here, this black line, dropping on a down candle. That tells me that the volatility guys are going to buy stocks. So if it drops on a down candle, they're going to buy stocks. Okay, so you can see on this candle here, it dropped aggressively, but it was on an up candle. That's normal. That's fair value. On this candle, you can see that this candle was a little spinner candle, so that's going to start selling. This candle was a drop, and the candle finished higher, so that's normal. This candle was a drop, but it was higher, so that's normal. This candle's normal, and this candle so far is normal. So I'm not getting the right candle to buy that trough line area. Not yet anyway. So I'm only playing around with the idea of exhaustion at the bottom edge. It's making some monies. I've got another buy trade on that new retest low, and I'm getting a stop in at break even a second time there. So that was pretty easy. So we got another retest low there. We talked about it earlier. We said we're buying on dips. That's the only trade I'm doing. So we got another retest low, and I bought again into that storyline, and we've had another positive response. That's nice. It doesn't tie in yet with volatility hedging, but it is still looking quite good at this point. Still looking quite good at this point. I don't like how this is starting to shape up already. That acceleration on the red line tells me that this will rotate back down again. And therefore, I'm going to be watching for another bottom edge. It's still macro bullish, but in short term, it's probably bearish. This is also bearish here. You can see that for yourself. So that upticking is bearish into high prices, and that's why we've seen this pinning so far in the trade. Into the bottom edge, I am now going to be watching. You see how when this downticks, this price should go up. So that's bullish. This is starting to spike a little bit too high, so that's going to be bearish. You'll see that price will start revolving off the high price in that trade. So you'll start watching that price revolving off the high. See how it revolves off the high at that point? See that? Just revolves off. Remember, this is a scalp. It's not a short term. It's not a short term. It's a scalp. Sorry, it is a short term. It's a scalp. See how that revolved off that high price beautifully? See that in real time? That was kind of crazy, wasn't it? Kind of crazy.